You will always fail if you don't have a clear, testable, and a reliable analysis strategy. Let's break down how to build one. Hello guys, once again welcome back to Right Way Traders. You guys already know what to do here. We'll talk about Forex trading realities. The reality of trading the Forex market, what you are going to see practically and the facts. Okay? On this video, we want to talk about developing a reliable trading strategy with analysis in focus. So what you be expecting in this video is how to develop a strategy, an entry strategy for you. We are not talking about risk management or trade management, particularly in this video, no, or trading psychology or routine, no. This video is just for people that wants to create a strategy. And take note, we are not price action traders. We are indicator algorithm traders. We work with indicators that pinpoint market trend for us. So in advance, I'm telling you, this is not a price action strategy. This is for indicator traders. How to develop a reliable trading strategy. Now let's dive into it. The first thing to do in developing your strategy, make sure you have your book and pen there with you, is to decide on the market to trade and the time frame you want to trade. Deciding on the market, is it going to be Forex market? Is it going to be the crypto market? Is it going to be the stock market? Or are you like those that trade synthetic indices like boom and crash? Those are not real market anyways. But you just have to decide on what market you are going to be trading. That's the first thing. If you want to be trading on all market, no problem, but developing a particular strategy for a particular market. If you want to be trading the Forex market, what kind of pairs are you going to be trading? As for us, we do trade the top 8 currency pairs. We combine them and we'll search for them. Depending on the time frame you want to trade, you just make this decision. You are good to go to the next step. The next step, the time frame you want to be trading. Okay, if you are somebody that have a lot of time with the trading market, you want to be looking at the chart all the time, you go lower time frame like the H4 time frame, the 1 hour time frame, or the 15 minutes time frame, or the 30 minutes time frame. This is left for you to make your choice. As for us as Right Way traders, we focus mainly on the daily time frame. The daily time frame is the most reliable time frame to trade with in the kind of strategy I'm going to be explaining here, which is the indicator strategy. Okay, the daily time frame, people will say yes, it's too slow, but we have about 28 currency pairs to trade on every day, looking for signals on those currency pairs, because we are trading the 8 currencies. So if you combine all the 8 currencies into each pair, then it becomes 28 different pairs. So we likely get trade every day in the daily time frame. One of the reasons daily time frame is good is because it helps you to, it gives you all the time. You don't have to be a slave to the market looking at the chart all the time. It helps you calculate and discipline yourself in time, and it helps you avoid errors because you have a lot of time to make your decision. The market is not going anywhere. When the candle closes by the day, it takes 1 hour before the candle like revives and starts moving again. So daily time frame is a very comfortable time frame I'm recommending for traders if you want to build your trading strategy. Remember, this is business. This is not gambling. So you need to take it serious. And also, daily time frame gives you a lot of time to do your thing or do other things you want to do that is not Forex trading. So people that want to be doing their 9 to 5 jobs can be trading the daily time frame because it takes very short time to trade daily time frame. For me, it takes about 15 to 20 minutes every day to check my analysis and do what I'm supposed to do, and I wait for the next day. It's as simple as that. So make this decision. Choose your time frame, choose your market. Number 2, choose the core indicators for your market analysis. Now I'm going to explain how we use indicators in trading the market. I'm not specifically giving you a strategy, but I'm giving an explanation on how you can create one for yourself. Now, instead of relying on your guesswork or price action myths, your strategy needs an objective rules. These objective rules are the reasons why you want to be entering the market, or why you want to exit the market, or why you want to stay out of the market completely. For example, in our trading system, we have the trend filter indicators, okay? We have the momentum shift indicators. We have the strength filter indicators too. Now, this indicator, they all have their uses in the market. Let me explain how we use this in entering the market. Now, for the trend indicator, for example, like the moving average, I'm just giving an example, I'm not giving you a particular indicator to use. The moving average indicator is a trend filter indicator. Like this indicator gives you, it tells you like where the trend is at the moment, where the market is going. So that's the work of the moving average or the trend filter indicator. Then the momentum shift indicator, maybe like the CCI or the RSI. This shift indicator tells you or give you the signal when the trend is about to shift to another position of the market. Like if you want to change structure, like from sell to buying trend, okay, this indicators is what gives you that signal before it starts. Now for the strength indicator, something like the volume indicator or the something like ADX, now this indicator gives you like the strength of the market, if there is enough power in that market for it to trend. The work of these indicators, they work perfectly when you combine them. So in making your decision, you have to choose the right indicator that you want to be using. Many indicators are lagging, but there are still good indicators, very, very good indicators that you can use in the market that are not lagging. Okay, before we go further, if you are following us on our Telegram channel, you notice there's a particular course for indicator algorithm trading where you learn everything. Will give you the indicators and the templates and the number, the settings, everything is there for you to learn, to pick and start trading immediately. Let's go to the next one. Number 3, your entry criteria development. Like your strategy must answer clearly. When do you buy or when do you sell? These are when you develop the rules in your trading. For example, with the indicators I gave there, the momentum shift indicator, which is like your CCI, that tells you when the market is about to change for the trend, okay? When the trend is about to start, this is the indicator that gives you the sign, okay? Now, if it crosses from negative to positive, it gives you a sign to buy. If it crosses from positive to negative, it gives you a sign to sell. Remember, like I said, there's a course for this. If you are interested in learning this deeper, you just join us on our Telegram channel, follow up, and you see there's a particular course that I spoke about all of this and the settings to use. Then about 9 different videos tutorial that I gave out there. So this momentum shift indicator gives you the trend when the trend is about to move. Okay, so you just state your rule. That's number 1 rule, for example. Then you need the strength filter indicator to see if the market has enough strength for you to enter that market. Okay, then after you need the trend filter indicator, which gives you the particular trend that the market is, okay, over the time where the trend is going. With these decisions now, you cannot make it, with these values now, you cannot make your decision on entering the market. At this point, this is where you make your rules, how you want to enter your buy trade and how you want to enter your sell trade. Write your rules down on how to use your indicators properly. Okay, then on the next phase, when you have your rules, you have your indicators, you have your time frame, and you have your market. If you have all of these set, the next thing to do, very important, backtest that trading system. Backtest and refine. Backtesting the trading system will give you the confirmation if that system is going to work for you, and also helps you to refine it to be more accurate. Okay, backtest for a minimum of 5 years previous. If you're using the daily time frame, backtest the strategy 5 years previously. We are bringing a special video on how to backtest your trading strategy so that you have the good record or the good data from your trading system previously, so you know what will happen in future in the market. Once rules are set, backtest them across different pairs and market conditions. Look for consistency. Does the strategy hold up during trend market? Does it filter out choppy markets? Adjust your indicators only if they improve results without over filtering things. Okay, the next phase after backtesting and you have a real data for your trading strategy is to forward test. Now, how do you forward test? Have a demo account, and then with your real data and your rules and everything, you enter your market as if you are trading a live account. Forward testing usually take 3 to 6 months in trading. Okay, once you have your forward testing data, when that's when you see the errors that you make in real life. That's when you see some things that you can never see during back testing. So during forward testing is when you are exposed to the real truth of your trading system. Number 5 now is to build your rule book. If you have gone through the whole 4 stages, the 5th one is to build your rule book. A reliable strategy is not in your hand, it is written down. So your rule book should cover your market selection, your time frame, the indicators to use, exact entry conditions. This prevents emotions and decision making and ensures you are trading the same way every time. So in conclusion, note this: a reliable trading strategy is built on clear, objective analysis rule that you can test and can repeat. You understand? So once this foundation is solid, then risk management and trading psychology comes in, which we are going to cover in future. So after now, I'll be talking about risk management, your trade management, how to enter your trade, which is very, very important. Okay, you can do anything or make any mistake, but once you enter your trade, there is a different emotion in the game. Totally. So we'll be talking about that maybe in our next video, how to manage your trading positions, your stop losses, your take profit, your exit point, your scaling out, your scaling in. I will talk about risk management too. And we've previously talked about trading psychology. You can go down, search on our YouTube channel to check for that video. Trading psychology, very important. Traders do omit this part of trading, which is why they keep losing. So avoid losing in your trading. Go and watch that video. So for now, that will be all for developing a trading strategy that is reliable. With this kind of roadmap that I've given you, use it to develop a solid strategy for yourself. And also, if you want to make the road short for yourself, you can just go through our Telegram channel, message the admin there to get the course on this trading system, okay, which is a very fast way for you to learn because everything is broken down and the template is already there for you to start immediately. So that will be all for now. See you guys on our next video talking about trade management. This one is about how to enter your trade. The next one is how to manage your position. See you guys.